Let's get more on the markets from Rebecca Teltscher, portfolio manager at Newhaven Asset Management. Great to see you.
Thanks for having me.
It does seem like an odd situation. We've got gold, which has been around for millennia, hitting record highs this week, but tech stocks surging as well.
It's been interesting to see both, Canada and the U.S. are both flirting with record highs almost on a daily basis. I think we're, at least on the U.S. side, we're looking at, record territory in terms of, being over 15 months of not having a 2% correction. And if you look at what's driving both markets, both markets are telling two completely different stories. So in Canada, you see a lot of the TSX is surging because of its weight in gold and precious metals. And, the XGD, which is the ETF that, a gold ETF, is up 21% just in the past month alone, and in the past 2 years up 165%, as you could see.
There's the TSX. We'll look at the XGD in a sec.
And there it is. That's an amazing run. If you look at the Mag 7 that's what I use to look at the Magnificent Seven, which is technology. The bulk of the technology stocks in the U.S. That's what's driving the S&P 500. That's up 7.5% in the past month and up 115% in the past 2 years, which is pretty impressive considering, how far it fell back in April, on Liberation Day. The thing is that both of those running at the same time is a little bit bizarre because it's a bit conflicting in terms of what causes each of those sectors to run. So if you think about gold, people usually flock to gold when there's an increase in geopolitical tensions, when there's economic uncertainty, when there's fear of inflation going higher because you want to hedge against the erosion of your purchasing power. So basically, gold is that flock to safety amid uncertainty. And then you think about technology and why the Mag 7 has been running since April. That's because there's the anticipation of an improving economy, a recession that's not going to happen, improving, trade tensions because a lot of the Mag 7s have, a global reach. And so I think about those two, this barbell, I call it the ultimate barbell, and they're telling two completely different stories. I don't know which one's going to be right. Our portfolio is somewhere in the middle in terms of just focusing on stable dividends and cash flow. But I would say I'm very nervous about the economy and what, and I'm not necessarily buying these valuations on the tech side, at least.
We keep hearing this theme of income inequality, that lower income consumers have been suffering, and whereas the rich apparently doing very well. I wonder that could mean, I guess, more right-wing populism if people get sufficiently frustrated.
Yeah, that's, and then also I think about, the tech sector and, or the Mag 7, and there's underlying risks almost with every one of those names. So as you're talking about the consumer, so Amazon, great company, not saying, no one's saying it's going to go bankrupt, but the underlying metrics that causes that company to do well is the consumer, right? So if we see a decrease in consumer spending, that's going to impact Amazon's sales. Same thing with, let's just say, Apple. They've been having supply chain issues. Microsoft has seen increased competition due to AI. Tesla is experiencing slower demand in electric vehicles and increased competition. So I look at not just the Mag 7 in terms of technology sector, but each individual stock has a lot of risks right now that can't be ignored. And if those risks are there, why are they trading at all-time high valuations? Yeah,
it's interesting. Amazon has been something of a dog this year, relatively speaking, compared to the other Mag 7 stocks. I mean, as you know, so much of their profit is from the cloud this year. It's up only about 1%, though, in 2025.
Yeah, I mean, that's just because we saw, and it's interesting, in April on Liberation Day, when we saw all the markets, panic as to what's going to happen, all the uncertainty with regards to tariffs, the interesting thing was it was the technology stocks that get hit the hardest. When you think about tariffs, you think about what's going to impact the most, and you would think transportation stocks, the rails, trucking. You think about industrial production, consumer production, anything with cross-border sales. But that's not what got impacted the hardest. It was technology, and not because their business has cross-border. It does, but really, I think why it got hit the hardest was because their valuations were too high. So, if you are priced to perfection, any slip or change in those high expectations can cause a huge decrease in the share price. And that's why I'll always say you could be a really good company, but a bad stock. And I would say Amazon falls into that. I mean, I'm a shopper of Amazon. I buy from there all the time. I think it's a good business. I think it's a fundamental business. I don't necessarily think it's a good stock with regards to its valuation right now. Could it get there eventually? Sure. But I think a lot of these technology stocks have a long ways to go before it starts trading at reasonable valuations.
Have you checked out Temu, the Chinese e-commerce site?
Yes, and don't tell my husband that because I have 2 young girls, so any kind of party supplies or Halloween costumes, I get those packages coming on a daily basis.
So it's so cheap though compared to Amazon.
Yeah, and a lot of the products are the same as Amazon. It's just as long as you could wait 1 or 2 weeks to get your products, you're paying half the price for it. So again, increased competition for Amazon as well, along with the decreasing, the consumer spending that's at risk right now. If we are heading to a slower economy, which I think we are, that's what the employment numbers are showing. And AI, as much as AI is this huge surge, at the end of the day, we haven't seen the effects of AI in terms of the reduced employment. Is AI going to start taking over jobs? If that's the case, then those employment numbers are probably going to get worse before they get better.
And it's interesting, we talk about AI, and of course we have to try to assess the markets, but in a way, in AI, we're just at the stage of clay tablets. Nothing against the people in Mesopotamia, but we're just in the infancy of this.
Absolutely. And so I think about, not to go off topic, but the central bank, right? And so they have 2 tasks is to manage inflation. Well, tariffs are going to increase inflation. And the question is how much and is it going to be a one-time, increase, or is it going to be a substantial increase? We haven't seen the impacts of that yet. And then the other side is to manage employment. And again, we're really in the infancy of AI. And if that is going to start causing a reduction in employment numbers and, what's going to happen there. So if I'm the central bank right now, it's I think there's two-sided risk at this point, which is what Powell said yesterday, and I completely agree with him. I think stage 1 will be what happens with inflation as a result of tariffs, but that AI surge, that AI boom, and how it's going to impact employment, that's going to be a lot more drawn out, and will take a lot longer before we start seeing those numbers that flow through the numbers.
Rebecca, thanks very much indeed.
Thank you so much.
Rebecca Teltscher, Portfolio Manager at Newhaven Asset Management.